And we're back for episode 9 of the Cash Flow Corner, along with myself, Aaron Thomas, with my brother, Jacob Thomas.
Yeah, how's it going, Aaron? And how's it going to all the listeners out there tuning in for episode 9 of the Cash Flow Corner? Couldn't be more happy that you guys are continuing on this journey or this podcast series here with us. I know for me personally, Aaron, before we dive into the content and, the conversation that we want to have for today's episode, and we have some exciting things planned out for today's agenda on this podcast. But before we hop into that, really just wanted to take a second for me personally, just been feeling a lot of gratitude and couldn't be more thankful for a lot of the encouraging words from some of the listeners and the people that have been tuning in. So, that for me, that just kind of helps reaffirm everything that we're doing, the purpose of this podcast, and helps eliminate some of those fears or some of that doubt of the direction of this podcast and what we want to do. So that's all good stuff that, that the listeners are finding some valuable content in the podcast series that we're doing. So outside that, really just feeling pretty settled in here for this episode and ready to go. How are things doing with you?
Yeah, I'm doing great. Like you mentioned, very thankful for this podcast. I know we've made a lot of great connections and relationships through this podcast and couldn't be more thankful for that. And really, I know whenever we started this podcast was the main focus was education and knowledge and just getting that content out to our listeners, but really want to focus more on getting listeners across to the finish line of actually realizing the opportunities that are in real estate investing and more specifically multifamily commercial real estate syndication, and just being able to recognize those opportunities and what you can achieve through those, I think, is a huge focus to note whenever you are tuning into these episodes, because I know we've talked about it a good amount of just what these deals can do for your future and ultimately how you can build your investment career through real estate. And even for us, just growing and becoming more knowledgeable every day that we talk on a podcast has really helped both of us grow and couldn't be more thankful for that. But really excited for today's episode of diving more into really the market overview as a whole from the United States. And I know there's been a lot going on in terms of talks of interest rate cuts and what that means for all asset classes and all investments. So excited to take a little deeper dive into that. But in other terms, personal life has been going great. Couldn't be more thankful for really everything going on. So that's always great. But other than that, how are you doing?
Yeah, no, I'm doing well. And like you said, on the personal side of things, everything's going well. I know Aaron and I, we have a golf trip planned back in Michigan. So I'm looking forward to that. We're doing a little Ryder Cup style thing with some of our buddies from back home. So can't wait to reconnect with some of those guys and see them. And we'll update you a little more on the the next episode, because Aaron and I are actually going head to head, one on one, mano y mano, the last day for all the marbles. So we'll make sure we keep you guys updated on that if that's something where you guys are a little more interested in keeping up to date with Aaron and I's personal life. But outside that, just ready to get this episode going. And the one thing I want to highlight or touch on, Aaron, before we hop into the content for today's conversation or for today's episode is really just relaying and hammering in that point of, why we do what we do and what the purpose of this podcast is being able to, from square one, establish that really firm foundation of education, being able to absorb the information, whether that's through reading books, listening to podcasts, maybe reading some different articles from people online, whatever that may be, and wherever you're getting your information. Hopefully it's here with us. I know we're putting out some articles. We have some different weekly emails that we're sending out to people just to help engage them a little more and get some more information out to them. But really, once you have that, like I said, that good firm foundation of the education piece, the key point here is being able to take that. And this is where we often see a lot of people get stuck, or they just kind of completely bail out and stop as a whole, is being able to take that information and put it into play or put it into action. So that's really the key crucial part here. If that's, maybe a listener, if you kind of resonate and you're stuck or you're not sure where to go, the best piece of advice I would have for somebody to take action, like I said, is really it can be something just as simple as going to a networking conference, a real estate conference, jumping on to different individual meetings, catching up with somebody to have a cup of coffee, whatever that looks like. Being able to have those conversations with those professionals that are in the industry, I feel like is just a good spot to kind of get going. If you're somebody that's stuck, I feel like that's a good spot to get going. And then outside that, too, obviously, like I said, if you want to join our investor community, head over to our website and drop your information there. That way you can get up to date information from Aaron and I. But really, once you have that education, you put it into action. I know, I can kind of speak on our generation a little bit, Aaron, and I feel like this is something where people often look for that instant gratification or those instant returns. And I would just be mindful to the fact of the world of real estate, and investing in the world of real estate is a long-term strategy for long-term wealth. So being able to look at it through that lens is super important for anyone just getting going, because I know it can be a little discouraging as you go throughout the process, but being able to have that bigger picture and that bigger mindset of long-term goal definitely helps out throughout the process. So there's my little tip on, motivation, or really just trying to drive people that are maybe a little stuck to get going and really start to take some of those actions, like I mentioned. But I want to transition a little more into the bulk of the conversation of what we have on today's podcast, Aaron. And just to go back over, like you said, we're going to take a little deeper dive into our market analysis, our current view of the market. And then we're also going to kind of start to pinpoint things to look forward to, things that we're kind of forecasting with what we're given right now with the current economy and the current state that we're in right now. So I'll let you kind of lead the conversation here, Aaron. I know we want to talk a little more exactly what's going on in the market. So if you could just start there, what are you seeing right now? And on top of that, what are ways that you're kind of projecting of, hey, we're in this situation now, but this is my outlook moving forward. So if you could just give a couple key points there and we can kind of just run with it.
Yeah, that's great. And just to start off and take a dive into really the economy and the market overview as a whole, I know it's been talked about a lot, and we're going to figure out if it's true in terms of interest rate cuts here in the next few weeks, because I know that's been a hot topic. And ultimately, it sounds like there will be interest rate cuts. I know the Fed is speaking September 18th. So we're definitely going to have that circled on our calendars, because that's been the biggest reason of really why investors and companies have been on the sideline this last year, year and a half or so, because with the interest rates so high, it's been tough to make deals pencil, because whenever those rates do drop, it makes debt more affordable, which ultimately increases cash flow in a deal and increases returns for investors and those companies. So, whenever those rates do start to drop, you're going to see a lot of more people start to get in on deals. And ultimately, I know a lot of people think pricing's the issue, but because they see prices so high and just don't think they're achievable. But ultimately, it is the debt side that's holding everything back, because whenever you are looking at a deal, you're looking at it ultimately what can be valued at whenever you're buying it and whenever you're selling it. And whenever you're going in on a deal, you don't want to push the seller so far that they just have to keep dropping the prices where they're getting the short end of the stick. You want it to be an even deal for both sides. And that's where the biggest gap is right now, is between that buyer and sellers, of trying to find where market rates are actually currently at. So whenever rates do drop, we're going to figure out where those are at and where they're at quickly. And just being able to recognize that is really key, because there's going to be so many opportunities here in the next few months if rates do drop. And just being able to recognize that is a huge focus. So then you're able to be one of the first investors in on a deal, because you never want to be the last, you want to be the first. And the opportunities these deals are going to have is going to be astronomical in an investing career and in a portfolio. So, really looking forward to that and looking forward to the near future.
Yeah, no, I love that. And that's a good spot to really start this conversation. And I want to back it up to the piece of, looking at the current state of multifamily syndication. Where are we at? What does that look like? And like you said, right now, we're just at these crossroads, is what I would almost kind of refer to of, hey, the seller's here, but the buyer's here. And like what you refer to, we have that buyer seller gap. And this creates problems of being able to pencil out deals and really try to find value. And what this creates is that determining factor of people sitting on the sidelines. And when you're looking at the people on the sidelines, it's not your mom and pop investors. It's not just your individual. We're seeing large institutions that are holding their money on the sidelines right now. So for me, when you look at that, and just to go, back through some numbers here, we're looking at some unprecedented times in terms of the sheer volume of transactions that is going around in the marketplace. And what you alluded to of being able to look forward to these opportunities as interest rates potentially maybe come down is not only are you going to have opportunities for properties that are just now hitting the market, but you're also going to be able to revisit a lot of those properties that, Aaron and I, that we have been underwriting for the last few months. If they're still on the market, that's a really good opportunity to be like, hey, let's go circle back to this property. Let's see if it makes sense now. So not only are we excited about the future opportunities that are going to hit the marketplace, but being able to revisit some of those older opportunities gives you a lot more to kind of pick from and underwrite, and it gives you a lot more flexibility in terms of what you're looking at as a whole. I feel like it might be a strong statement of what I'm going to claim or say here is I feel like we're entering into what I would say a generational opportunity when it comes to buying multifamily properties. So I can't wait to get the ball rolling. I know we want to attack it and we want to get it done. But yeah, just overall, I know Aaron and I we're just excited about the future ahead and what those deals are going to present themselves here in the future. So I want to kick it back to you, Aaron. If you have a little more insight about what does the market look like, what are the rental demands, who's renting, why are they renting? Do you have any a little more insight there for our listeners to pick up on?
Yeah, that's a great point. And like you mentioned, with interest rates stabilizing with possible rates in the horizon, it's always a great sign, but we're still seeing that rental demand continues to grow. And we're also witnessing a demographic shift really in the United States, while more people are choosing to rent than to buy, not only because housing prices are so high right now, along with interest rates that even makes it worse, but really this younger generation is more skewed towards the rental side because we're noticing population growth along the Sun Belt area, as you would think of Florida, Texas, Phoenix. And this is driven by factors such as not only home prices, but lifestyle preferences and flexibility that renting offers. And this surge of demand for rental properties is particularly strong in the multifamily sector because noticing how the future generations are going to act, what they're skewed towards, only helps build your case for investing. Because, like you mentioned, in terms of any investment in any asset class, it's aimed towards a long term wealth building investment. And recognizing these trends is huge whenever you're looking at investing in any certain asset class. So I would say that noticing that right now is a huge note to make, while also noting that, like I've mentioned in a prior episode, whenever interest rates do drop, it's also known that other asset classes values also drop as well, such as stocks, bonds, mutual funds. So right now is a great opportunity to really either expand your portfolio into real estate or even expand your portfolio into real estate investments. And I think that's what a lot of people are starting to notice. a lot of investors are starting to move money around. That's why you see money starting to come out of other asset classes, because there's such a good opportunity in the near future for real estate investors. And I feel like a lot of people are really loading up for that. And that really gets us excited. And I know that's what we're looking forward to.
Yeah, I really like that. And you know, where I want to take the conversation now is being able to take a deeper dive into the market of how do we expect rents to perform not only now, but here in the future as we continue on. So let's say, for example, if you were to get into a deal this year, how would we predict or model potential rent growth, and how do we start to look at that? And that's really based on, you know, a lot of different factors. And the one thing I want to mention first is being able to identify that supply and demand that's going on in the market right now. And really what we're seeing is demand is currently high, like you mentioned, Aaron, but the new supply that's coming onto the market is really struggling to keep up. That absorption rate is high. All these new units that are coming to market, they're getting filled up, which is a good thing, obviously. And then also at the same time, too, when we're looking at new builds or new developments, current construction costs have increased. There's a lot of regulatory hurdles to jump through. There's a lot of things that are slowing down the current developments or the new properties that are, trying to jumpstart the market. And ultimately, this limited supply combined with that high demand is creating a really good scenario for that overall rent growth as we go along. And my overall main point, or how I want to summarize this, is from the current market conditions that Aaron and I are seeing right now, is you're seeing stabilized interest rates to possibly, like Aaron hinted at, of maybe some possible interest rate cuts here in the near future, along with that strong rental demand, limited supply, and then also at the same time, too, I know it's a big topic revolving around the election, a potential recession, that idea of inflation. You know, that's a word that's getting thrown around a lot right now, and it's heavily discussed by a lot of people. But by allowing yourself to invest in a multifamily syndication property, what this essentially does, it gives that investment an opportunity to hedge against that inflation, which essentially creates this perfect storm of syndications of what we're looking to get into. And honestly, that's why we're so excited about the opportunities here in the near future. The market is offering some potentially strong returns at the moment, and the syndications are a powerful way to capitalize on that potential without the hassle of, maybe you're somebody that just wants to do it yourself. Maybe you want to try to, fix and flip, whatever that may be on your own. It provides that outlet for syndications to really provide that win-win scenario for everyone involved. So overall, I'm just I can't get enough of where we're at right now, and I'm excited to push forward.
Yeah, exactly. And I think that was great. And I know there's a lot going on whenever people think about the economy and the certain market overview, either if it's in their backyard or what's really going on as a whole. But ultimately, just understanding the trends and the benefits of those trends is a huge note to make, because, like you were mentioning, of just being able to be that passive investor whenever you're in a real estate syndication deal is so key, because you let the sponsor and the general partners really build that strategy, but you make sure that their strategy is aligned with your strategy as well, that both the general partner and limited partner can succeed together. And I know we've got a lot of questions, and I know a lot of people may be weary about getting in or trying to figure out if this is the right time. But we firmly believe that there's going to be huge opportunities here in the next 3, 6, 8 months. And really, if a lot of people may be asking themselves how you can get started, or is this the right time to jump back in? And we would just love to have a conversation with you to really try to figure out what your real estate goals is, what your strategy is, really what you're focused on, so we can align interests together to put a strategy or deal in place with you that aligns with you. I think is very beneficial, and like you mentioned, a win-win scenario for both us and the limited passive investor, because right now is the time to take action and to really dive in and say, this is the investment that I want to be in, and the investment that's going to build long-term wealth. And recognizing and realizing that is almost that light bulb moment that you realize this is what you need to be in. And that's what we're really trying to focus in on and really find deals that just work for our investors as well. So, really excited about that.
Yeah, and that's honestly the last point. I know we're wrapping up this podcast here and we're kind of coming down to the end. And that's the one point I just wanted to reiterate from the start of this conversation is, you know, Aaron and I have been in your shoes if you're an LP. We understand what you're going through. And we know that maybe taking that first step can feel a little daunting, can feel a little scary. But the worst thing that you can do for yourself at this moment, if you're, like I said, maybe one of those people that are stuck or not sure which direction to go, don't wait. It's only gonna make the process even worse, or you're just gonna give up on it. Just don't wait. And that's something where now that Aaron and I have been doing this for a couple of years now, it's like that light bulb moment of why weren't we doing this sooner? So once you get into it, you don't want to be one of those people of like, hey, I regret doing this. So just, another little tidbit of motivation, I guess, but just don't wait. And if that's something where you guys have questions a little more of, maybe it's just on the what is syndication, like just a real basic overview of that, or maybe you're struggling a little more about whatever topic it is, we're here to help you guys out, not only on the podcast, but use this as if you guys want to set up a quick meeting or have a quick phone call, whatever that looks like, we're going to help you guys out throughout this process. But just don't wait. That's all it comes down to for me. If I can get one, main message across is take action.
Yeah, exactly, Jacob. And right now, we are offering a free, no obligation consultation where we discuss your financial goals, answer your questions, and explore how current and upcoming deals might align with your investment strategy. And like I mentioned, it's all about finding the right fit for you. So if that sounds like something that you might be interested in, either email us, go to our website at twinluxcapital.com, put your information in there. If you still want another resource, download our free ebook. That's another great resource just to gain a little bit more knowledge on. But ultimately, going in there, putting your information in there so we can reach out, talk about what deals might fit you, what you're looking at, what we're seeing happen in the market, I think could only just be mutually beneficial. So I highly recommend that. But other than that, I think that's a great spot to really wrap up for today and couldn't be more excited for the journey ahead.
All right. And yeah, I guess that's a wrap. So thanks for tuning into this episode of Cash Flow Corner. We hope that you guys found a lot of value in Aaron and I's discussion today. So as always, if you guys could subscribe, keep sharing our content on Instagram, LinkedIn, wherever you guys are getting your content. We know who you are, so definitely share our content. We appreciate it. But other than that, we'll catch you guys on the next episode. Take it easy.